Thursday edition of the Daily Market Commentary. Hope everybody had a great trading day yesterday. I am your host, Chuck Fulkerson, coming at you old school as we're starting to round off the week. We finished off Hump Day, and now we're headed into to the weekend. So let's go ahead and dive right in. For those of you new to the channel, do me a favor, click that subscribe button down below so that you get the updates as they're released. And do me a favor, share the video with some friends. Let them know what we do. We look at the same 10 to 12 futures markets every day, identifying turning points and potential breakout trades. The key is we leave the lines on the charts, holds you accountable, holds me accountable, and keeps us all in a happy state of mind. So let's dive right in. Starting with the S&P. Now, the S&P has reached our price target. So we had a breakout. Our breakout trade was off of this area here, and I know a number of you were able to catch up with this breakout and have ridden it all the way up, and we've hit our profit. We've hit our price target. So hip, hip, hooray for the price target. Now, this price target is also an opportunity to go short. Here's what I'm going to tell you. I'm taking it off the list. Now, it is a dashed line, which means that we go short when it gets halfway in. Right? We have to wait for it to get halfway into the level, and then we get short as it comes back out of the level. I got to tell you, right now, I'm just not comfortable taking a short on the S&P. I'm just not doing it. This is getting removed. And why is it getting removed? Well, we've got, on a 4-hour chart, a little bit of this fair price value area strong drop away. And I've got a potential profit target of right down in here. So we do have enough profit target to do it. I'm just not a big fan of our arrival into the level. We're chopping around a lot before getting into the level, and what I'd hate to do is give up some of this nice profit we've earned from the breakout because I'm getting greedy, right? Now, there's a good chance that it still may roll over from here, but you could get a little reversal right in this region here, this 2761, 2760 area. There's a good chance for a reversal there. I think there's a better chance for a reversal down here, actually, at the origin of this last move up. So, though we may get a reversal back down, I'm just not comfortable with this area up here any longer. So I'm actually taking this one off. Remember, I only add lines or remove lines when I'm in a video. So and it hasn't reached our entry criteria quite as of yet. Now, by the way, very well still may work out. And if you do want to short it, but you're not in it yet, if you say, you know what, I think there's room for it to run down, and you're not in it yet, how do I get into it? Well, you could use candle-to-candle style of trading. Now, how would I use candle-to-candle style of trading? Well, it's already gotten us a lower low. Now, if you did use strict candle-to-candle rules, you're already stopped out, right? You got a small profit, and you're stopped out because you got a higher high right here. You can still get in and do it. You would just want to take a breakdown below this little base here that just formed. I will tell you, I am not as of yet. I may a little bit later today, but the reason I'm not is because just below here, if I take that little breakout, just below here, there's this on a 15-minute chart. Now, that 15-minute chart's not humongous, but it's not going to give me the room to roam that I need. Now, that doesn't show up on the hourly. On the hourly, that just shows up as a wick up here and a wick down here. Call that a wick over wick level, right? Shows up as a wick over wick area that I'm just not comfortable. Remember on my breakout rules, I need room to roam, and this is taking away my room to roam. So I've got this area down in here, 2753, 2748, as a potential reversal if we do make it down to there. Although, you know, I'm nearly to the point where we've changed, we're back to the no shorting rules, right? And I'll tell you why. Nasdaq is in the no shorting zone. We're in the no shorting zone for Nasdaq. No more shorts. And why am I in no more shorts? Well, as if you've listened to the show for a while, I've got a couple of rules. Never spit into the wind, never tug on Superman's cape, and don't short the all-time high. Shorting the all-time high, you know, it can prove fatal in the long term. You may catch one or two that you get lucky, but at one point, you know, what if you shorted this all-time high right here? You say, okay, great, we're at an all-time high, I'm going to short it, and then you get stopped out, and then it moves down. You're kicking yourself because you feel like you missed it. Well, what if you shorted this all-time high, or this all-time high, or this all-time high, or this all-time high? See my point? Don't short the all-time highs. It's a lot more tempting to short the all-time high when you see we've had some pretty violent moves off of the all-time highs. I'm just not willing to do it. And we are, you know, we did set in a brand new all-time high in the Nasdaq overnight. And so I'm just not doing it. It's against my rules, and worse than being. I'd rather you buy an all-time high than short one. Let's put it that way. So we did break through. I had a little bit of a trend line. Oops, wrong drawing tool. I had a little bit of a trend line here yesterday, and I said that there's a good chance that we'll bounce up from this trend line area. We did get down below it, but remember, that's where trend lines are a great time to do candle-to-candle style of trading. And if you look into that candle-to-candle style, then you could have gotten a reversal somewhere off of here, at least ridden it up to for a few points off of there. Maybe you get stopped out through here, another bite at the apple through here if you decide to use that particular style. That style is most effective when you are looking for major reversals around major time frame pivots. So what am I looking at today? Well, if we do get that pullback today, I actually like that S&P level a little bit better than I like most of the levels inside the Nasdaq. And that S&P level was formed around the open on Wednesday morning. So when I go look at the open on Wednesday morning, it's about this same level here in the Nasdaq. So I do tend to look a lot of times at the time of the day that a reversal occurred, because that tells me the probability of it occurring again, and this puts us really back to the bottom of this area, which was support. So, it's this is basically the same level as we have in the S&P. Now, because our sector leaders are by far consumer discretionary and technology, Nasdaq is the top performer. When you look at our sectors, I talked about this the other day. Financials are basically flat year to date, but utilities and consumer staples are getting crushed, while technology and consumer discretionary is continuing. It's just continuing to march higher. And so this is the fun part of, well, if we do get a pullback into here, the Nasdaq is the better performing sectors overall, better performing market overall due to sectors. Looking at crude oil. So crude oil, we're still between the areas that we'd identified a couple of days ago, so nothing really happening true to our levels in crude, nothing to add. Gold, I put in a flyer level yesterday. It's why it's in purple with very limited opportunity. That there's not a lot of opportunity in those kind of small time frame trades. My fear is that we would get a little bit of basing just before the level, which is exactly what we got. If you notice, we rally up, base, candle, base, and then boom, pop right through the level. So that one's a very, very small loss if you decided to jump in on that one. My guess is if you didn't set it up and you watched it, then this probably scared you away before entering into the position. Everybody's got their own rules that they follow as far as the basing before a level and how they control their risk, but it's no longer going to be a valid level anyway. So that was our breakout trade in gold. Is still moving along. If you took the breakout a couple of days ago and you're still in that one, then great, moving along. But if you tried the reversal, then you probably got your hand slapped just a little bit. Nothing major. Looking next at bond markets. So in our bond markets, we've almost come back to this line here. Now, remember this 118 line. This was a breakout short. We took the short, and then it was a breakout long. We took the long, and I left the line in there because it just seems to be a price magnet. This has seemed to be a magnet for price. Now, what we do off of it this time around is going to be more determined on what happens once we get here. I will tell you, I'm not setting a breakout. I'm not setting up a breakout trade below this blue line. And the reason being, while I still think this blue line has some validity and it's an area where price may move around and move through, it doesn't follow the breakout rules as of yet. Meaning I need to see price base off of here a little bit. So I'm going to change what I'm doing here. I'm leaving the line in because I want to have the line in, but I want to set up an alert right here just to alert me when we get at or below this number. So I'll get a little bit of a text when we get at or below this number, and then I can look and see. Actually, I'm going to move that down just a smidge. I can see what does price look like when we're getting to that area, and that's really what I need to see is, are we chewing up the orders around this area to give us room to fall into this zone right here? Aussie. So in the Aussie, we have our setup, our buy area way down in here. We kind of hit a top and are starting to roll over a little bit in the Aussie. For those of you that are short-term day traders, you might enjoy this little pattern which is being formed. This typically works well for a pretty nice breakout on a breakout from here. If I get the video out in time, hopefully you'll be able to play something with that. In our Euro trade, our Euro breakout is continuing its run. Remember that this came from a much, much bigger time frame trade, so that Euro breakout has maintained its momentum and it's continuing its run higher. For those of you that were able to hop in on the breakout. And then the Canadian dollar, we are still inside that same triangular pattern that we had pointed out yesterday. Looking into Great British Pound, Japanese Yen. So our British Pound, we are almost coming into a potential reversal area now with a very strong move down in the pound. And we have a 15-minute level right here. So this is a pretty close level. We're almost there. Not quite there as of yet, so we'll see what it looks like. Arriving into that zone. Depending on your risk tolerances, you may or may not be willing to take this level. You certainly are going to have a nice profit potential coming back the other way if you do get this order filled coming up out of here. So take that one if it makes sense to you and your risk tolerances. Nat gas nowhere near the level. Japanese yen still well below, and copper also still well below the area. So real quick, earlier in the week, I had pointed out a soy trade. Oops. So earlier in the week, I had pointed out a level in soy. Let me zoom in on this. That we had a potential reverse out here, and if we didn't get the reversal, then we had a potential breakout below this line here, and that's kind of what we've seen. Is that we did get a bit of a breakout below this pinching area. So if you are so inclined, you have an opportunity to get short in here. If you have not gotten short yet, maybe you can catch it on as it begins to roll over and get short on a breakdown below this area here. Once again, full disclosure, soy is not something I trade every day. It's actually something I've never traded. Somebody just asked me to look at it, and so I'm just following up on that level. Another one that we looked at yesterday was Bitcoin, and what's funny is that after I looked at it, I saw, I don't know, 5 or 6 tweets about it, about, hey, here's what might happen in Bitcoin. Not that people are following my tweets. My point is just everybody sees the same thing. Now, when everybody sees the same thing, it gives me a reason to pause and take notice, and maybe I'm seeing something that too many people are jumping in on at one time. And so, I still think there's a breakdown point below this blue line here, at least down to here. But the really big time frame says we break out of this triangle, it's moving one way or the other. So for those of you that are trading Bitcoin, I know there's a number of you out there that are doing it pretty actively and looking at it pretty regularly. So that's all I have for today, folks. If you got any questions, please feel free to send me an email, chuck@iiefinancial.com. Thank you so much for joining, and I will see you soon.